So let us do a chart and understand what we are talking about. So construction related, there are two issues. One is you are constructing on your own a building. Otherwise, you are getting it done from works contract. Both cases, whether you are doing it or not, input tax credit not available. Not available. Input tax credit is not available. It is available only if it is something in the form of not capital nature, not not of capital nature, which means you are charging to P&L, then you will get it. Otherwise, you will not get it. That is, small works and all you can still claim, but construction activity which you are going to capitalize, that you will not get. That's the idea behind it. But if this is a works contract fellow, he can claim the input tax credit that he is getting, because he is himself he is himself going to give the supply to us. So his input he can claim because he is going to do further supply. That case he will get. Otherwise, other cases it will not be available. That is the example that is given. Similarly, composition, already leave it. It's not very this thing. That means the person who is going for composite supply, composition scheme, he will not get input tax credit. X has opted under Section 10 for composition scheme or alternate composition scheme. Tax inputs paid by him is not eligible for this thing. Goods received for non-resident taxable person received by input tax credit is not available by a non-resident taxable person. If hours are imported by him, tax credit is available. If goods are for personal consumption, we have already seen it will not be available. So let us look at a sample provision illustrated. X, this is not that, sorry. Yeah, X goods and services are used only for personal consumption of the registered person. Input tax credit is not available. Maybe for personal consumption of sole proprietor, partners, or distinct. If goods above goods are partly used for personal, partly used for business, input tax credit will be disallowed on proportionate basis. What is that proportion? We'll look at it later. Goods lost, stolen, gift, free samples, etc. Input tax credit is not available. Written off, not available. Let us look at example. A pharma, wait, just a pharma company gives free samples to doctors. No GST is applicable on outward supply. Supplier and recipient are not related and absent GST is nil. Input tax credit will not be available. So for if the pharma company is free, then he need not charge GST because it's not related and without consideration. Therefore, it will be nil. Therefore, what he is buying, that the pharma company is buying the goods, so that input tax credit he will not get. Free gifts sent by head office to its branch office. This activity of distribution of gift or free samples falls within the scope of supply. Why? Because it is related party. On supply of gift by the head office to the branch, GST is applicable. Consequently, supplier would be eligible to avail benefit of input tax credit. On July 9th, Reliance Digital offers business buy one, get one power bank free. It may appear at first glance that in such case, power bank is being supplied free of cost without any consideration. In fact, it's not an individual supply of free goods, but a case of two supplies where a single price is being charged for the entire supply of mobile and power bank. It is can be best be treated as supplying two goods for a single price. It is not a free supply, hence input tax credit will be available. So that more or less covers our very important please take care, please take care, please take care. The 17.5 is a very important section. This one we'll come to that later, so this will take a lot of time. I'm not getting into that much, we'll see later. Apportionment of credit. Again, as we saw just now, personal, half this thing, how do I do? So where it is not available, so 17.1, let us look at it. Use for business purpose, input tax is available. For other than business purpose, input tax is not available. Use for taxable supply, zero rated supply, that is exports. Use for activity specified in Schedule 3, except for sale of land and building, available. Under non-taxable supplies, alcoholic liquor or consumption, petroleum products, etc., not currently covered under GST. Used for exempt supplies, that is different entities covered under exemption notification, or used for supply which are covered under reverse charge. Exempt supplies also covered under land and building. Input tax not available. We'll understand this better because this is what controls our input tax credit further. Because where you can identify specifically these are items that are, these are what is very difficult for P&L items. If it's a trading item, it is very simple. We can say, I am not, for example, I'll give you an example. I've got a typical case where it's a hospital. In their outward supply sales, when the supply, they've got pharmacy products they sell. They are inpatients, outpatient. Then they also sell lab items. They charge GST on only this. These are all exempt. For their purchase, they've got the pharmacy supply and the lab items they purchase. Now, because GST we are charging on the pharmacy items, this GST also we are taking input. This there is no input for this. This only doctor is sitting and doing a treatment. No, it's only fees income, input patient fees. This is also fees. It's exempt under notification. Lab items, because they are not charging here, no input is being taken. They are not considering it. This is all fine. Now what happens to P&L items? P&L items, when we take these, can I say that this item is only used for pharmacy supply? For example, audit fees, I am charging GST on that. Can I say this GST is only used for pharmacy supply, therefore give credit for that? Or is it used for also all this? Definitely all this. Therefore, can I claim the entire input tax credit on this fund? Because it is used, this service is used not only for pharmacy, for these items also. That is where we have got something called common credits. It's what we are going to look at. So especially the P&L items, mainly P&L items. That is the summary of what we are talking about, but these are P&L items. So if input tax credit is exclusively used, see, that's what I'm saying. If it is exclusively used for purpose other than business, one can easily find the quantum of input tax credit not available because we can easily distribute it. Likewise, input tax goods or service are exclusively used for making non-taxable supplies, determine of input tax credit is not available, is not difficult because you can separately identify. Problem arises when input tax credit is not exclusively used for the aforesaid purpose. Apportionment of common credit in such cases governed by Rule 42. The mechanism by the rule is 42 is illustrated with an example. We'll discuss the problem in detail, so that I'm not going to record it so that we can do it later.